It's better to have your business credit and not need it versus you need to have it and then of course you don't have it in place, right? So it's better to have it and not need it than to need it and not have it, because at that point, that's when you're telling yourself, you know what? I need to have this. I need $10,000 quickly. I need $15,000 quickly. But listen, there's a lot of great options out there for you once you start building it the right way. Hey, what's going on, guys? Calvin Russell here. In today's video, we're going to talk to you all about how business credit really works. Let's get right into it. So to truly build business credit, you need to have these 6 components. Number 1 is going to be establishing a business bank account. Okay. Number 2 is getting a business credit card or a bank line of credit. This is going to help you continue to build your business credit. We're going to break these down as well. And then number 3, managing your use of credit, your credit cards, and of course your lines of credit. All right. Then the number 1 factor that affects business credit the most is going to be paying your bills on time or early. We'll break this down. And then of course, making sure that you're choosing suppliers, lenders, vendor accounts who submit your payment activity to the credit agencies. And last but not least, regularly checking your business credit report and correcting any errors. Also, if you haven't done so yet already, be sure to like, share, and subscribe. Okay, so first let's break down some basics. Business credit versus personal credit. Now, business credit is totally separate from your personal credit. They are not the same, okay? Think of it like your business unique financial ID or the business social in a sense, where it has its own credit profile. Then you also have the major business credit bureaus. Okay. For example, Experian Business, Dun& Bradstreet, with this was kind of fading out a little bit as well too. Then of course, Credit Safe, Equifax, and of course the FICO SBSS score. Now, if you're new to business credit, you may not be familiar with the FICO SBSS score. This is a small business credit score that lenders may use. Okay. Now, this is a credit score that's needed to obtain like a small business loan, either through a traditional lender like a bank, or of course also needed for if you are looking to get an SBA loan approval. Now, these are the steps that you need to take if you're looking to build your business credit from scratch. Okay. So number 1. Okay, so here's something I'm truly excited to share with you guys today. And that's today's sponsor. Fairfigure is the fastest growing business credit builder out there. They've already helped over 35,000 small businesses build their credit, which is crazy. And what makes Fairfigure a great company is that it's designed specifically for businesses that are just starting out or struggling with traditional banks. It takes like no time to get started. All you have to do is enter in your business email here and then click get started. Or you can click right up here at the top where it says sign up. Once you're approved, here's what your dashboard will look like with instant access to your business credit scores. Now, if you're familiar with nav.com, Fairfigure takes it a step further with tools like their budget advisor. Yes, nav.com does provide scores, but Fairfigure gives you the tools to actually improve them. It's all about action. If you want to start building your business credit today, just scan this QR code or click the link in the description below. You need to make sure that your business is registered. I cannot tell you how important this is. You can't even start the process without even having your business registered. And that's essentially making sure that you have your entity set up, like, for example, an LLC, whether it's a corporation, an S Corp or C Corp. So your business has a legit credit identity. Okay. Then you have to get an EIN. This is essentially like your business social security number, as we just touched on. In order for it to have a separate credit profile, it needs to have essentially that social. Now, your social is your personal identification number, as we know. Now, your business needs one as well, and that's what that EIN is going to come into play. Okay. Then next, as we mentioned, you need to have a business bank account. Why is that? When you have a personal bank account, this is going to be obviously for your personal expenses. But a lot of business owners, what they do is they end up commingling their funds, and they may not mean to. That's because of the average business owner, they usually take the money that they've made from their personal earnings, like from their job or a side hustle, something like that. And then they end up using that account. But here's the thing. If you're going to have a business and essentially, if you plan on building business credit, you're going to need a business bank account anyway, because the whole point of having a business is to obviously one day provide a service or provide a product that people are going to pay for. And obviously that money needs to go into its own account. Okay. Now it's essential especially for keeping things separate from your personal finances. And because what ends up happening is that people end up not only taking money from the business and using it for personal, but then also taking the personal to continue to fund the business. This is where business credit is going to come into play. Also, I know some of you all may be on the early stages of building your business credit. So let us know if you got any questions, comments, or concerns inside the comment section below. Now, these are the steps you want to take to actually start building your business credit. And don't worry, we're going to break these down a lot more, but I wanted to make this video a little bit quicker just so we can touch on the basics on how business credit really works. Okay. So number one is going to be through vendor accounts. Now, this is where you're able to start with small trade lines to build your credit history. Okay. There are many companies to start with. Some companies, of course, going to be subscription based. Some are you're actually buying products and of course, paying them back on a certain amount of terms, whether it's net 30, net 45, net 55, net 65. There's going to be different net terms. Net is essentially when the bill is actually due. So let's say, for example, you buy something, let's say $200, okay? And it's on net 30 terms. That means you need to be essentially paying them back all of the money that you borrowed from them or essentially used, which is a $200 within that 30 days. Okay. And honestly, the sooner that you pay it back, the better, because again, your business credit is going to mainly be focused on how fast you can actually pay that back, or essentially payment history. Okay. You do not want to be late with things as far as your business credit is concerned. This is going to be key in building your business credit, because unlike personal credit, where it's like utilization, where your balance divided by the limit, business credit doesn't pay too much attention to that. Okay. Its main focus is going to be making sure, can you make your payments on time? So when you accept those net terms, make sure that you're in a position where you can actually pay that bill when it's actually due, whether it's net 30, net 45, whatever those terms are. This goes into the next piece, which is on-time payments. This makes a huge difference to your score, as business credit scores, as I just mentioned, focus mainly on this. Okay. Now, this is one of the first things that people, like back in the day, this was one of the early ways to kind of do it. If you had a vendor account, the next thing people typically got was a business credit card. Okay. Now, there's a lot of different types of business credit cards out there. Some of them will actually be a personal guarantee. Essentially, this is where you're giving them your social, but you want to make sure that your business credit is established where it doesn't need to have your personal information on it. Okay. Like, think about it. If Walmart wanted to get a credit card, there's none of the employees there are going to be putting their information on this. Same as you. The problem is that your business credit is typically too new. And so it's okay to have multiple vendor accounts early on and then wait to see what comes in the mail. And you'll be surprised. A lot of credit card companies are going to be okay with you having a credit card without having to provide that information. Okay. A lot of people, they just throw away what they get in the mail. If companies send you something in the mail, that is an opportunity to do business with them. That means that they've seen enough to send you out something in the mail. The mail is not free. Okay. So you got to think about it from a business standpoint. Why would you keep sending someone something if they're not going to meet at least most of the qualifications? Okay. And not every business credit card needs your personal social security number. Okay. That's the goal. Now, there are some that will, but again, the goal is to get some that will not need your personal information. That's the whole point of building business credit. And like I mentioned, this can be from offers in the mail or even from your own personal bank as well, too. Not every bank is going to have a business credit specialty or business credit card specialty. So make sure that you're asking your bank, because some banks may have relationship managers and things of that sort. So again, you want to make sure that you're having that conversation with the right people so you can make sure that you're not missing out on any products that you or your business may qualify for. Now, why does business credit matter so much, especially if you're a business? And let's just say that you're a small business and you have no intentions on growing. You still need business credit, and here's why. Number one, just in case your business does grow, you're going to get access to bigger credit lines. And of course, that's going to be better rates as well, too. Now, you can only do this once you start building your foundation, and it's going to get stronger. Okay. Your credit profile is going to get stronger. So over time, that's where you're going to have a solid business credit profile. You'll get higher limits. So on your credit cards as well, too. Okay. And access to loans without having a personal risk. They won't even ask for your information anymore, because now you have that profile. They can see that you've been paying on time, that they've been receiving your payments on time, that the relationship is being built. So they don't have to ask for as much documentation. Okay. Also, as your company grows or needs more of something like equipment or whatever the case may be, you don't have to use your personal liquid cash or your personal credit. This is huge because I've seen people go from a small business, and then the business starts growing. They get the storefront, start buying things, they get staff, right? And then of course staff, they need things, right? You start taking the money, from your business, and then constantly bootstrapping in a sense, and constantly waiting to get paid just so you can get some things for your business. A lot of people, that especially people that are not even from America, they come here specifically because the way we have this set up, you can essentially just build that relationship up for a short period of time, 3 months, 6 months, 9 months, somewhere in that range, and then start getting access to funds immediately. Okay. And even if you don't have much going on and you've only been in business for 3 months, you can still meet those qualifications and get some type of funding. Okay. And again, the stronger your credit profile, the longer that you're doing this, the better the profile is going to be, and the easier it's going to be later down the line. But here's a problem that a lot of people make. This is a very common mistake that small business owners make, is constantly using their personal, not just their personal money, but their personal credit as well. Now, something else to consider is that there is no minimum amount of money that needs to be used for the establishment of business credit. Here's what I mean. You could be a barber, a hairstylist, or whatever your small business is, a web designer, coder, whatever you want to do. And you may say, well, I don't have as many business expenses. I'm spending $50 a month on business expenses, maybe $300 a month on business expenses. You still can benefit from having business credit, because there's going to be one day, or not even just one day, but if you want to upgrade something, if you want to change something, you don't want to keep the habit of always waiting to see when the business is going to actually turn a profit to actually start paying for certain things, or upgrading certain things, or preparing for the future. You don't have to keep doing that. You want to make sure that no matter what is happening within your business, that you're ready. If things go left, if you need to cover payroll, if you need to upgrade something, if you need to buy more of something, you want to make sure that you're in position for whatever happens to your business. So it's not like, hey, I don't need $10,000 right now, so there's no point of me building business credit. You still need to have it out the way. That way you can determine what you want to do. I've seen people, maybe do something else with their business credit. They may say, well, you know what? I want to get into real estate, or buying properties, or fix and flips, or I want to do. You never know where that business is going to take you. So it doesn't hurt to start doing it, because let me tell you something. It's better to have your business credit and not need it, versus you need to have it, and then of course you don't have it in place, right? So it's better to have it and not need it than to need it and not have it, because at that point, that's when you're telling yourself, you know what? I need to have this. I need $10,000 quickly. I need $15,000 quickly. But listen, there's a lot of great options out there for you once you start building it the right way. Now, here are some pitfalls to avoid when you're building your business credit. Okay. Number one, as we kind of talked about, is commingling your finances. This is going to be a risk of mixing your business with your personal expenses. Okay. And a lot of times people, early entrepreneurs do this just because, again, they don't teach business, early on, or people don't learn it early on. And so this is where you want to keep those expenses completely separate, because you have your personal bills and the business has its own expenses as well. Okay. Number two, relying solely on personal guarantees. For many of you, if you're looking to get like a certain amount of funding and you don't have your business profile, your business credit profile yet heavily established, then what ends up happening is you have to be a personal guarantee. And there's nothing wrong with that, but this should only be at the very beginning, depending on how much you're trying to get and things of that sort. Just be patient, but you got to be able to move away from that at some point. And that's usually about month 9, month 12. This also could depend on how well your company's doing. Like if your company's struggling financially, your credit's not the best, things of that sort. Or if your company's too new, then you're going to be like, okay, we need a personal guarantee. But again, if the credit profile is strong for the business, if it has some trade lines, if it has some vendor accounts, if it has some credit card accounts, and again, that they're reporting to the business credit bureaus, okay? Because not all business credit bureaus are going to report every single month. So this is another reason why it takes time, okay? Patience is going to be key. But some people, they want to get business credit in 1 month, and of course try to get funding in 1 month, and you can. But again, there's going to be a lot more red tape, especially starting out if you don't have any previous relationships already built. And of course, number 3 is going to be ignoring the business credit reports and not even knowing what's on it. But it's very important that you regularly checklist. For one, you want to make sure that the trade lines, the vendor accounts, whatever accounts you have, are now reporting to the actual business credit report. And you want to make sure that it's accurate too, because business credit is not like personal credit. there's a higher risk for, errors. Sometimes it's the wrong, industry code for your industry, the wrong address, or, it could be any type of information that could easily get mixed up with another business. There's a lot of businesses out there with very similar names in different cities and things of that sort. So you want to make sure that everything on there is accurate. Thanks for watching, and we'll catch you guys on the next video.